cares? Why not buy? Etc. etc. And everything that we're doing right now, guys, please, I need you to understand this. Everything that we're doing is simply based on information we gathered previously, anticipating, adding confluences to New Zealand dollar strength, yen weakness, and then anticipating this candle's close bullish. And that is all we are doing. Does this make sense? Does anybody have questions?
Hey Ross.
Hi.
How you doing? Just a quick question. Say for example we're trading 15 minute, 1 minute.
Yeah.
Can I approach looking at the 15 minute as how we looked at the 4 hour? And the 15 minute is what gives the direction?
Bro, I've just given you the holy grail. It is
always with the 4 hour.
Nope. It is the fundamentals that you need to concentrate on, everybody. Okay? And it is what I've just told you. So now, let's go to the 15-minute time frame. Let's take a look at this. This candle closed strong bearish, do you agree?
Yes.
Isn't it pretty convincing that it broke the level in the market?
Yeah.
Are you identifying a structure in the market where price was pushing bullish, and now we're starting to see price failing to break above?
Yeah.
Indicating what? Potential depletion in this sentiment? Everybody agree with this? Okay. If we take a look at New Zealand dollar USD, are we seeing a similar sentiment where price is pushing bearish?
Yes.
Okay, so that could mean what? New Zealand dollar weakness or yen strength? Let's take a look at euro yen. Is yen going down? Absolutely, at the same time. So now, what do we do here? If price breaks above here, we do not buy. If price trades within this range, it's good for sells. And if price breaks below, that's our breakout. Retest, breakout, void. Now what do we do? Scale down to a 1 minute time frame. What can we identify here? This was the previous 15-minute close. Now what structures do we have here to work with? We have a structural lower high, lower low, lower high. What do we anticipate after a lower high is formed? A new lower low. Stop loss above wherever you want to put it, and there's your money, baby.
Yeah, I got just one little question to add on to that. We're talking about currency strength. That is derived from the 4 hour.
Yes, but if you're using the 15-minute, you won't need to use.
Okay, so you still use the 15 even to decide currency strength. Okay.
Yes. Because remember now, the range of what you're looking for when trading the 15-minute is based on this, a single candle's movement again. So you're looking to take advantage of this range, because on the higher time frame, let's say you're trading the 4 hour, your range for your stop loss will be, let's say, 12 pips, because you're taking advantage of potentially a bigger move on the 4-inch time frame. But when you're trading the 15-minute, you're taking advantage of a smaller range of the candles. So let's say you got in here on the 1 minute, you're looking to take advantage of a smaller range like this. Does this make sense? Okay. Now, what you do to add confluence to this is you identify the structure of the market just from a logical perspective and say, right, we're starting to see bearish behavior here. Okay, we're starting to see bearish behavior here, so New Zealand dollar weakening, is yen strengthening, we're starting to see bearish behavior here, and then you add that confluence. Because what will happen, what is happening now with this candle on the 4H?
This candle pushing down.
Correct. This is where I need to connect the dots, right? Okay, so let's say you come to the market, maybe it didn't push up as much as we thought it would. What's the time? Okay, so new candle's open. But if this candle closed bullish, what is your sentiment?
Bullish.
Correct. If you go to the 15-minute time frame and you start thinking that it's bullish, and you see that this is closed bullish or whatever else, let's just say it's a great candle, yeah? You're going to look for buys.
Mm-hmm.
If it was, no, how do I explain this? Yeah, that's hard to explain. Just use the 15-minute, okay? And then just look for your confluences like this, and say, okay, cool, I'm getting a good gauge of what's happening. Mark your level. Then what you're doing over here is you're then identifying the structures to support that. So that's price failing to break. We have a break below level here, and then now you can add your pattern, which is this information here. Does this make sense?
Yes, thank you.
All you're looking to do is take advantage of a small shift for one 15-minute candle.
Yeah.
Okay?
Yeah, thanks.
All right. 1 hour. Exact same thing. Okay? Let's say we're looking at hourly. We'll go over examples on a daily basis. Tomorrow we'll start with 4 to 15 minutes. Then we'll move on. But let's say here now. Okay? You need to think about this logically, guys. It's really that simple. I'm not going to do the easy buys because that's too easy. I mean, you guys should just smash those buys. I mean, look at that. Jeez, oh, please. Let's do this sell. It's harder. Okay? Look at the structure. The previous hourly candle closed bearish. Can you look for a sell?
No. You could, but it's risky.
All right, you've got a gun to your head right now. Think about everything that you know about trading. You've got a gun to your head. And you have one choice to take a trade. That previous candle has closed bearish. The structure of the market is overextended. We're in a very strong push phase. We need a higher low before continuation higher. Can you take a sell?
Yes. Yeah.
Can you take a buy?
Yes, too.
You can't take a buy. This candle closed bearish. We're not playing here. This isn't, then green. It is if this was green, you take a buy. If this was green, you take a buy. This is 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 green, you take a buy. Etc. Etc. Do you get the point? So if this candle closed bearish, you cannot buy it. Because what happens now is you miss the fact that the sentiment has changed to bearish. So what you do is you think that it's still a buy because you're looking at this structure as a whole, collectively. You scale down to a low time frame, you see a retest, you take the buy at the first 5-minute close, what happens? See you later, mate. You must stick to this, guys. You cannot take a buy if the candle just goes bearish. Can you not? Did anybody take these buys? If none of you took these buys, then we don't want to be taking buys here if you can't get obvious buys. Okay? So listen, can you take this sell? Yes, you can. Is it wise to take this sell? Probably not. Because you can see the sentiment of the market's been pushing bullish. But if you wanted to, you could. Because we reason that the market's overextended, it's a very strong push phase, we can anticipate a pullback exhaustion. Now, what are we waiting for? We isolate our candles. What are we waiting for? We're 5-minute traders, we're isolating our single candle. What are we waiting for? We're waiting for the market to create this information first, and then start turning bearish. There you go, guys. In 1 hour, 3-hour trade. How hard is that? Simply based on the fact that this candle closed bearish, previous structure is extended. Now, this candle closed bearish. If you start shifting bearish, there's a high chance to close bearish. Simple process. Now, this is where it becomes difficult. If you come down to the 5-minute time frame, what can start happening? Lots and lots of noise. Now, how many of you would have missed this whole trade because of this information here?
Yeah.
How many of you? Everybody would have. But if I took this trade after this candle closed and placed my stop loss, let's say above here, because I just felt like it, so everyone, whatever the amount, who's going to understand this trade if I said this to you in the chat?
No.
Nobody would. But if I isolate the area of the market where that candle previously closed, maybe I would have taken it there. Maybe I would have waited for that to close and take it on the break, whatever, okay? But if I isolate that Audi candle close, what am I going off of to take this trade?
1H pushing bearish.
Correct. 1H is pushing bearish. The previous, let's even take it here because this looks more reasonable, I'll be honest with you, right? The previous candle closed what? Bearish. 1H is pushing bearish. And the only reason why I'm down here is to try and take advantage of this. Nothing else. Point I'm trying to make, it doesn't matter what it looks like on your entry time frame as long as it makes sense on your high time frame. How many retail traders took this sell? Probably 1% of them. Why? Because they do this. Consolidation, market's in an uptrend. Oh look, buying opportunity, all morning, all day, it's been pushing bullish. Guess what? New Zealand dollar strong, yen's weak, time to take a buy. And then what happens? The market falls down, stops them out, and they shit themselves. Well, there's me, who just goes to my hourly and looks at this and says, from a logical perspective, what is happening? Strong bullish sentiment, blah, blah, blah. You know what? The right trader for is, I've missed all this move. Time to get away from the charts. But if you're sitting there and trading, and you say, okay, cool, what's happening? Well, that candle closed bearish. You don't have to rush, remember? You don't have to rush. You've got 5 minutes, or 10 minutes, or 15 minutes to make a decision. No one says you can't enter down here if you want to, and go for a one-to-one. Because you have to build that belief system that this candle's going to close bearish. The simple fact that the previous candle closed bearish. Then you just add those added confluences by going over to here and saying, well, what is making sense right now? The market was pushing bullish, it's now stalling. Then we had a break for consolidation with that momentum shift. Do you know what? I like this entry better. I trust that the momentum shift's in place. I will safely put my stop loss above the previous candle because that's what I'm comfortable with today. And then I go for my targets. 1 to 2, whatever it may be. It doesn't need to make sense down here, guys. It needs to make sense up here first. Now, what we want to be doing, exactly how we've been doing elsewhere, is just making sure we're adding confluence. So we want to identify that New Zealand dollar is weakening. At the time, what do we identify? We may not see a red candle, but what do we see? Logical thinking, we're seeing what? Prices failing to break above, meaning that there's not enough room for New Zealand dollar to break through this. Okay, makes sense. We're in a bearish close. We don't have a key level there, but we do. But we have a bearish close instead. Let me see if the yen is starting to strengthen. Oh, now we're adding confluence. Look here. We have a bearish close on euro again, which means yen is showing signs of strength. We have New Zealand dollar USD failing to break above this level, so New Zealand dollar doesn't have that room. And we have a bearish close here on New Zealand dollar JPY. Alarm bells should start ringing. You should revert back to your approach and say, I have a gun to my head. What can the next candle be? Can it be bearish? Well, there's a high chance. Logical thinking. Strong push phase in the market. The market is now showing signs of depletion in New Zealand dollar strength from the confluences that I've looked at. And we're also seeing yen strengthening I have a gun to my head, I have to make a decision, buys or sells. Well, I think in this instance, it makes sense to sell because firstly, we can't buy, so we'll look for the sell. If I'm looking for a sell, what am I looking for the market to do? Well, I want the market to trade below the high, break the low, or come back to 50% for a retest. Okay, cool. Let's go down to the 1 minute time frame. Let's see what's happening. I don't want to buy in here because I'm really not comfortable because, you know what? I'm just not comfortable because I'm still scared of the noise. Fine. On the 1 minute time frame, you have an area in the market where that hourly candle is now shifting bearish. You get a retest into a key level, and now you can start saying to yourself, okay, it makes sense that if price starts to break wherever you want, everyone has a different approach. If it starts breaking this area in the market, I'll look for a sell. Why does this continue to make sense? Because all you're anticipating, remember, is that hourly candle will close bearish. Welcome to the Holy Grail. And this is nothing special other than the fact that understanding what? A candle has to close bullish and a candle has to close bearish today. Identify your entry time frame, go down to entry time frame simply to place your stop loss where you are comfortable. For bigger risk to rewards, for safer, for whatever it may be. But never forget, if this candle is in motion, then in theory there is nothing wrong with just doing this here like this. And if you think I'm lying, look at the candle. Did that not close bullish? 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 Now, some of you might say this to me. Oh, Rox, but what if it creates the wick and I enter and it starts pushing bullish and then it comes and creates a lower wick? Guys, what's this called? What's that called?
Nothing.
Nothing. It's just a bloody stop loss. You have them all the time. Get over it. It's going to happen. That's what you do. You walk away. Come back the next day, pushing bullish. I know it's not the next day, but work with me. You take the trade. Guess what happens? You decide to hold it. It doesn't come back to stop you out because after it created the wick, it went bullish, continued up. Are you complaining now? No. Did we change anything? No. We still believed in the fact that the candle, once it turns bullish, we add some of the confluences, it's going to close bullish. And same here, it's going to close bullish. And now can you see the power of confluences? If you add those confluences, you identify high probability trading setup, identifying the behavior of the market, then scaling down at the last minute to see if you can find structures to get a better entry or a stop loss placement for bigger risk to rewards. And that's all you're doing on the lower time frames. Other than that, guys, have faith, have belief that if the market is talking to you or pushing bearish or pushing bullish, that candle's going to close bullish or bearish, execute the damn trade, and that is it. Trust the process. Does this make sense?
Yeah, Ross, I have a quick question.
Sure.
So if we believe it's close red after the first one close red, so it doesn't really matter if it creates the wick, right?
The wick.
Yeah, wick. So the wick doesn't.
Some candles will create wicks and others won't. That is something you're going to have to specifically specify in your trading plan. This is what we call creating rules. I'm the trader that waits for the wick first. I'm the trader that will enter with or without the wick. How do you know the right answer to that question? You execute enough trades to gather the data to then identify what is working and not working, and you eradicate what's not, and you focus on what is.
Makes sense. Yeah.
Do we have other questions, guys? Does everybody feel a little bit more clearer about approaching the markets in this fashion? It is stupid simple, and I know that the 5-day course there, Masterclass 2.0 there, 3.0 there, 4.0 there. Just trust me, guys. As I continue to grow, I will continue to help you. But I don't think that there is any other concept out there like this, and I say that so humbly. I really do, because a lot of concepts and strategies that you trade are discretionary. What you cannot argue with me about, and why I will always be right, is that at some point today, a candle has to close bullish and a candle has to close bearish. And you cannot argue with me about that. If you wanted to, you could take trades like this. Scale down, you see the wicks formed, you're looking for the first sign of a bullish close, Oh shit, I should have shown you this because I don't want you to go and start doing this now. But hit TP. If I sent this to you, would you understand why I took this trade? If I put this on Instagram, what would somebody say to me? Well, some smart ass will come along and say this was a liquidity grab and a stop hunt and a blah 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 blah. But I don't care about that. What I do care about is I have a belief system that if this candle was going bullish, that at one point or another today, this candle's got to close bullish, or a candle's got to close bullish. So I just isolated where the wick formed and it started to turn green and said, guess what? I trust that this candle will close bullish. I want to enter here and use the structure in the 1 minute. Smash the 1 to 3 in a few minutes and that's it, Bob's your uncle. Why can't you believe it? Because it's too damn simple. Or you can't believe it because the trend is down. Or you can't believe it because you scale down here and you put a break and retest and you're taking sells. Instead, all I'm doing is saying, okay, I saw the previous candle was bearish. I do not advise this. I always recommend going in the same direction as the previous candle. But if I see this and it's gone green, I really want to drive this home. At some point today, if you take a buy here on an hourly candle, at some point today, one has got to close bullish. Meaning if you scale down and do this, you'll win your trade. And at some point today, a candle has to close bearish. Meaning that if you do this and you take a sell like we just see illustrated, the candle's got to close bearish. Let's think about this. Go for 1 to 3 risk to reward ratio trades. Identify when the candle turns red, put your stop loss above. You lose 1, you lose 2. But you continue with that process and you enter here and you get a free arm. Then you do it again, and you get a free arm. You do it again, you get a free arm. Why should you fear trading? Why should you fear getting results? Just because you lost the proxy trade, we know at some point today another one's got to close bullish and another one's got to close bearish. Are there times where the market's going to do this, guys? Absolutely. Well, I know we're highlighting all the best right now, but if the markets are doing this, what do? We identify there's no volume and we walk away. That is called minimizing or mitigating your risk. If you take a trade and it was bullish and it turns bearish, guess what? Forget about it. It's just a losing trade. If you take a trade and it pushes bullish and stops you at break even, forget about it. It's just a break even trade. Eventually you'll come to the markets and you'll hit a trade and you can hit a trade and you can hit a trade, you can hit a trade because this candle closed bullish, this 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 closed bullish, bullish. And even here, this really dumb trade that I don't want you to get into, but it started turning bullish. So I said, let's scale down. Let's decide to take a trade. And there you go. There's your free arm. 1,000 to make 3,000 in 1, 2, 3, 4, 5, 6, 7 minutes, 8 minutes. Okay? So this is what I want you to be thinking about and focusing on. I will go over this to understand the principles and fundamentals that I'm telling you, not so much so try to work out the strategy, but understand the fundamentals, take notes, and then tomorrow we'll start with the 4H 15 minute, next day we'll start with the hour and 5 minute, Thursday we'll start with the 15 minute and 1 minute, and then on Friday I'll get you on for questions, sharing your charts, seeing your trades that you've taken, and doing some exercises with some of the members here who can come forward and do it. Okay? You feeling pumped?
Yeah.
Feeling pumped?
Yeah.
Good.
Yes, sir.
Now let me explain something, guys. Please, don't just go away and be like, bam, I'm going to start taking trades now, everything's good. I just want to make this clear. It's 3 o'clock. Some of the best moves have happened already today. The volume is going to start lowering or depleting or whatever you want to call it. Identify your trading times and the trading times that have the most highest probability chance of having that volume in the market and trade, execute them. If you want to do something now, you can go and do some back testing or forward back testing or whatever else. Or even better still, take an hour, half an hour to just sit there and think about what I've just said and process it. Processing information will lead to long-term results. Taking what I said now and trying to apply it to the charts immediately will not do you any good. Process it, let it sink in, wait for this video to upload or get it uploaded ASAP, and then take some notes, rest your brain, and I promise tomorrow morning when you wake up, you'll see the charts differently. Promise you. There are a lot of other elements to this you need to understand, guys, but the majority of it is logical. Okay? I will upload it to the website for sure. Guys, I hope this was useful. I'm feeling pumped. I'm going to start this evening clearing up the channels and opening the channels to get you guys in, and you guys can jump into the channels you want. That will also clear them out as well, so that we don't have big numbers there with inactive members or members that are just inactive, and then you guys can start working together on really understanding this. I have full faith in you that if you listen to what I've just told you, you will start to get incredible results. Okay? Please, just hear me out. All right? Have a great one, guys, and we'll catch you a bit later on, all right? Take care for now. So what's going on, everybody? Welcome to day 2 of the masterclass. We've turned this into a masterclass. I think I said yesterday we would do that. And yesterday we went over the fundamentals of just the idea behind the approach to the market that you're now learning. I got a lot of private messages and public messages saying thank you, I've cleared things up, I've opened your eyes to a new way to look at the market in a more simpler way. And this is really important to me, guys, because, there's a lot of you here, and for me as a mentor, there's nothing more rewarding than seeing all of you get results. Like, you just don't understand. Like, it is ridiculous. And I think the mentors that have been with us for the last, how long has it now been? 3, 4 months, 5 months, however long, they can testify to what I'm saying. Like, as a mentor, when somebody turns around and tells you, thank you, I'm making progress, getting results, man, geez, money just cannot buy that. So I'm really happy to have got those messages from you guys privately and publicly, and I do hope to continue on through this process for the next 4 days that will continue to be able to clear things up for you. But it's very important that you guys who have watched that video only once and still have questions to go back over it again and to take notes, to make sure that you have got every little element of what you need to have an understanding of what it is we're doing with this approach. It is very, very simple, and it basically derives from the simple fact that at some point today, a candle has to close bullish and a candle has to close bearish. So let's take a look at gold. You can see here this candle closed bullish. No reason why you couldn't take this buy. Let's take a look at pound USD. This candle also has closed bullish today. No reason why you couldn't have taken a buy. I haven't taken a look at all the markets, but let's take a look. Fair enough, this candle closed bearish, but not the greatest, but you still could have taken a sell. The point is this, guys, the trades that you take, some will win and some will lose. But what I'm trying to drive home here is this, that at some point today, the candle must close bullish and the candle must close bearish. If you can accept that, you can identify that by just looking at the charts, and you can really start to believe in that, then there is no reason why you can't take a trade that looks like this when the candle starts turning bullish. There is no reason why you can't take a trade like this when the candle is going bullish. There is no reason why you can't take a trade like this while the candle is going bullish, however you want to do it. The point is this, guys, we don't want to jump in front of a moving train. If we take a trade in the direction that the candle color is, let's say this now bullish, then there's a very high chance that this candle will continue to close bullish. What we want to do is add confluences to our trade to get the best entries possible, so that we can take advantage of better risk-reward ratio trades, which is the edge that we have as traders that will make us, obviously, that will give us the edge. Yes, that is it. Just give us the edge, which is our risk-reward ratio. So if you do have a sequence of losing trades, when you get a good risk-reward ratio return, you're covered. When you have a good sequence of winning trades, you're laughing. Then it prepares you for the following week when you have a couple of losing trades. You now don't go into minus or back to break even, you stay in profit. And you just continue to compound those results over and over again, week by week. You've got to do, every single one of you must accept this and understand you have to try and keep it super simple. Okay? Now, what I don't want you to do at the end of this week is start confusing what I've taught you. If there's anything that you need to know, I would have told you. So if anybody says to me, well, Rox, there's a key level here or there's a key level here, can I really be buying into it? If I haven't told you that you can't do that, then guess what? Do what you have to do. Because the point is this, traders, after the candles have played out, it makes logical sense why this would happen. If price breaks above a structure, it makes logical sense why price will come back to a key level. If price is closed bearish but doesn't continue bearish and then starts to turn bullish, it makes sense after it's happened that the depletion of that bearish sentiment hasn't maintained itself, and now it makes sense that it will continue bullish. You have to continue to talk out loud, create these stories with the evidence that you're given, and practice this every single day. Because once you do that, then it makes it a lot easier to be able to execute these trades. And the only thing that really holds you back is the fear and doubt. That is it. But once you start to believe, and I mean really believe, and I know I keep talking about this, and all of you might be thinking, oh, Ross, come on, get off it, man, just get on, I've got things to do. I need to drive this home, and I need to make sure that you get this locked in your head. It is only doubt and fear that's going to hold you back, okay? So you need to believe in what I'm telling you and what we can see on the charts right now. Everybody can identify a bullish and bearish candle. At any point that that candle went bullish or any point that the candle went bearish, you take the trade. If it goes bullish and you buy, then it turns bearish, and you tell me, oh, Rox, it was bullish first, now it's bearish, then I just say it's a losing trade. But you continue to repeat that process over and over again during a sequence like this, 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 your risk to reward will cover you. And that will be your guarantee that you will be a profitable trader. So before we continue, do we have any questions so that we can cover this and understand the fundamentals so we can move on from this? Sorry, not cover this. Evans, I hope I press record, bro.
Hey, Rox.
Hey.
Good morning. Yeah, I have a question. Are you gonna, do you include in your analysis a recap or a review of the analysis of the markets from those various news sources? What the analysts have to say?
From what analysts have to say?
Yeah.
Hell no.
Because I think I saw a video, and you went on, like, I think it was Epic Street, and you look at what the sentiment was, and then you went back to the
that's me. Yeah. That's me just trying to cater to as many traders as possible.
Oh.
So, and that's me just trying to be too bright. Half the shit I talk about I don't even understand. I just sound convincing. Listen to me. I don't really care, bro. The point is this, yeah? All I do is come to the charts. I identify the behavior of the market today. I see if I can find those correlations along with the sentiment of the market. Then I just use scaling down techniques to find early signs of the sentiment that I've identified from the higher time frame and enter. Bish, bosh, bash. I trade when I want to trade, when I can identify a trade. Sometimes I get lucky, and if I take a trade when there's news and I don't know there's news, then I get lucky. Sometimes I get hit, sometimes I don't. I'm not really a big fundamentalist, to be honest with you. I don't believe in it. I think it's all media and whatever else, and I just prefer to trade what I know to be true is going to happen today. Then a candle closes bullish and a candle closes bearish, and that's me, bro.
So, so you use the two candle theory a lot then?
No, I don't use. I use the two candle theory. Yes, majority of the time, but I use single candles on higher time frames to then judge lower time frames before I get to my entry time frame. But that is not something that will be taught this week. You guys will learn to do that yourselves over time. But this week you will learn the two candle theory, which is 95% of what I trade.
Okay. Alrighty.
What I mean by that, let's say I'm looking at gold today, and I can see this candle's pushing bullish. what I do is isolate the low and the area where the candle goes green. Now the previous candle was red, so that means in theory, if I was following the 2 candle theory in the 4H, I have to take sells. But I don't want to miss an opportunity to take a trade when I can also isolate an area in the market where I can identify the price is failing to break the structures. So what I'm then looking for is for that initial shift in the market to illustrate that the sentiment is now turning bullish. An area in the market where I can place my stop loss, if that's where I want to put it to be the safest. And then I'm just looking for behavior that resembles the higher time frame candle, which is illustrating to me it's going bullish, of an area where it's failing to break, so that I can take advantage of this move here like this if I wanted to. This was news, by the way, so I doubt I would have taken it. I don't know, to be honest with you, but this is what I do every single day. Now, if I'm trading the 15-minute and 1 minute, which I do more often than not, then I'm not concerned about what the previous candle was on the 4H. I'm now looking at the behavior is on the 15-minute. So if I'm taking this trade, I've got to make sense of it before I take it, which simply means that I always identify these patterns, and you'll see this all the time, guys. It is price pushing to the upside, failing to break, and then the shift in momentum like this. This is a pattern, push to the upside, failing to break, and then the shift in momentum, okay? Now, in order for me to take this sell, I need to isolate the area where I'm going to take the sell below, and then I need to just gauge on the 4H time frame what the status of this 4H candle is. If this 4H candle has created a wick and turning bearish, I'm not necessarily then looking for a buy because of the previous candle close. I'm going to go with the bias of what this candle is telling me, which is currently bearish. Then I'll use the 2 candle theory in the 15-minute time frame to identify the structural lows, the area where I'm looking for the retest, and then the area in the market where I do not want to trade, which is going to be the break of this high. Once price starts to break above that high, I'm not interested in the trade, and as long as price trades between the range of the previous candle, I can now use scaling down techniques to go to the 1 minute time frame. I'm then looking to isolate the area on the 1 minute time frame where I'm starting to form the structures that illustrate to me that that bullish sentiment is now changing. We get the break in the structures, and then I'm looking for the first signs here to look to take a trade. Doesn't matter if I would have taken it here, this is for illustrative purposes, but what I'm doing is then doing something like this to then take a trade on the 1 minute time frame as part of the 2 candle theory to take advantage of a much bigger range, because I get a better entry in the 1 minute. Does this make sense?
Yeah. One other question, read the 2 candle theory. Isn't it like the top wick and the very bottom wick you use, or is it the let's say the top wick and where price is at presently, which would be a pretty different thing.
No.
So
You just asked me how was it used? Somebody just asked me how I trade, and do I use the 2 candle theory concept? And I said yes, 95% of the time, but sometimes that's how I trade as well, using single candles. So that was just illustrating what I was saying. If we continue on with the show today, you're going to start to understand how you can use it yourself. Okay. So I can see in the chat somebody's obviously upset. Dan's upset that he's down on his challenge. I understand, bro, and it hurts. Pretty uncomfortable. And this is the business you're in, Dan. You have to accept it, buddy. It is a business where the markets are very highly manipulated, and during these events like CPI, the big boys can do what they want without getting in trouble. Yeah, so you just have to make sure that you're keeping on top of it, bro. Especially if you're in a challenge, if you're up in profit, you need to be looking to take partials. I think you went break even and it shot straight through it, but it happens, bro. It's going to happen to you many more times and many more times and many more times. Just learn to build resilience, because in the future when you're trading big money and this happens to you and you get slipped for 30 grand or you get slipped for 40 grand, you're going to know about it, bro. And if this is how it's affecting you now and you lose 30, 40 grand in the future, if you get to that stage, which I don't doubt you can get there, bro, you're not going to just be effing and blind, and you're going to want to take your life. So start building some sort of resilience towards this. This is just part of our day-to-day business. Always be accountable for your results. If there was news, be on top of it. If you're close to 3-hour profit, take your profits. Don't hope for the market to go in your direction, okay? But you're absolutely going to be fine. Trust me, bro. I know you've been working hard, and I know you can pass your challenge, but trust me, Dan, I get pissed off as much as you do, but please keep it up. Stay focused. You've got to bounce back from this, man. What doesn't kill you only makes you stronger, all right? So, I don't know how long the video will take after this, guys. It renders for a bit and whatever else. So, guys, do we have any questions on the fundamentals of the strategy, not the intricacies of it?
Hey, Ross.
Mm-hmm.
How do you determine the current status of the 4-hour time frame? If let's say like
Did you not watch? Did you watch the video yesterday?
Yeah.
But did you though?
I watched half of it.
There you go. So go back and watch that video, and I promise you'll get your answer.
Alright, thanks.
Yeah, please. Guys, if I was in your position and I was getting knowledge like this, and I'm not saying that it's the Holy Grail, but I can tell you for a fact, it is pretty powerful. I'll be watching every single second of that video. I'll be taking notes at every single minute of it to make sure that I've transcribed the whole damn video just in case Rox decides he's deleting it tomorrow. There is no way I'm going to let that go past me. Okay? So please go and watch it. So guys, let's go. The two candle theory concept is simply derived from the fact that if a candle closes bearish, there is a high chance that the next candle will continue bearish. There are a couple stages of a candle formation forming, and that is a wick must form first, then a body next. If it's going bullish, it's a wick first, body next. Everybody should know this. So in order to take advantage of really good risk-reward ratio trades, we have to find areas in the market that we can take advantage of better risk-reward ratio trades by identifying the potential setup before the setups happen. That means if price breaks a previous structural low in any sequence and the wick has been formed, this is called what? What kind of trade is this called here?
Break and retest.
A breakout. If the market pulls back to around 50% of the previous level, what kind of trade is this called? 50% retracement, retest trade, okay? Now, if the candle pulls back to the 50% retest, what color is the current candle status?
Green.
Green. Good. What color is this candle again?
Red.
Okay. If the current candle is green, and I've just said you sell when the candle is red, how difficult do you think it could be to take a trade psychologically because of the colors or because of the current status of the candle? Anybody think it would be difficult?
Psychologically, I'm gonna eyes when you should be going to sales.
Correct. Psychologically, it could be difficult to take the sells because the current candle is green. But how many times have we seen that price closes bearish, the next candle is bearish, the wick is formed, and then it closes bearish?
Many times.
Many, many times. So instead of being the trader that decides to wait for the candle to go red, we now need to start to do what? Build a belief system that if we get the evidence that the market is pulling back, even though the candle is green, we can still look for sells. Reason being is if we get into the sells early, as opposed to waiting for take profit down here, we can get take profit here. But how do we do that? What do we have to do?
Gather confidences.
We have to scale down, okay? We have to scale down. Now in scaling down, what does that create for us? Well, let's say the previous candle just closed bearish. We are anticipating the next candle to go bearish. The current candle that is open is now pushing bearish, and we want to see the market make a new lower low. The formations that we'll see on our intraday time frames should be a clear downtrend with an area in the market that price is now pulling back to create either a retest of structure or create a lower high of structure. Once we get either the retest of the previous structure, a retest of the low of the previous structure, or the lower high, what are we now looking for?
We project
Momentum lower time frame.
Momentum shift.
Fine. Now, in order to get momentum shifts, we're going to need to identify potentially indecision candles. We're potentially going to need to identify momentum candles. We're potentially going to need to identify pin bars or wick rejection candles. Make a note of this. this is the only thing that you're going to be looking for as a trader. This here. This information here. This is the only thing that you're going to be looking for when you scale down to lower time frames. Now, let's say that I take the sell when I identify these things here. And then price starts to shift in my direction and then pushes bullish and stops me out. Is that a bad trade?
No.
It's a fantastic trade. Let's say the market starts to push bearish and now we get to one-to-one break even and it turns back and stops me out and then continues bullish. Is that a bad trade?
No.
Not at all. What do we classify these trades as? Simply just losing trades. Remember, what are we relying on? We're relying on our risk-reward ratio, which is our edge, to ultimately make us money in the long run. So then, if that is the case, should we fear entering, even though the candle is bullish, when we want to take sells?
No.
Because we have to create a belief system that all this candle is doing is what?
Just a pullback.
But what is it creating?
The wick.
A wick and away.
A wick before it then does what?
Flips and pushes.
Turn bearish.
Flips and turns bearish. If we scale down to our lower time frames and we see indecision candles, what does that tell us?
Eyes not working.
We need something a bit more specific.
Rejection.
There is a depletion in this bullish movement. If we get a bearish momentum candle, we are seeing a depletion in that bullish momentum. If we see a pin bar wick rejection, we are seeing a depletion in that bullish momentum, meaning that price is doing what? It is failing
To break.
to push higher. If price is failing to push higher, and we see that this previous candle closed bearish, what does that illustrate? That the momentum, the bearish momentum is still strong. Now, can you see how, from a logical perspective, how this all makes sense? There's no science behind it. And this is the simple theory behind trading the two-candle theory. Now, let me ask you something. Let's say we have a key level here in the market. We see that prices come bearish, push bearish, push bearish, push bearish. Then all of a sudden, price rallies off at this level, and we see the market continue to push bullish. Then the market comes back to level after a long period of time. If I get a bullish candle closing off at this level here, can I now look for buys?
Yes. Yep.
Yeah.
The reason I can look for buys is because in this scenario, it makes sense. Now, what comes first, the story or the evidence?
Sorry. The evidence.
Evidence first. Because if we are waiting for price to come back to this level, and we create a story in our heads that price can bounce off this level and go bullish, what are we going to start doing? We're going to start scaling down. We're going to start looking for evidence on the lower time frames to look for those entries. And then what could happen? We could enter the trade and the market continues to fall down. So we're not looking for the story first. What we're looking for is the evidence to then make sense of the story next. So if this candle closes bullish off of the support level, even though this structure is in a downtrend and we haven't broken this structural high, can we take a buying opportunity?
Yes.
Yes.
Very good. And the reason why we can take a buying opportunity in this scenario is because of this reason. Let's say now we identify a 4H candle close. From a 4H time perspective, what does this level indicate to us?
Previous high.
Our last lower high. Meaning that as long as price trades below this level, we're good for what?
Sell.
Correct. In a push phase, what do we anticipate the market to do?
Exhaust.
Wait for the window.
Now, if this candle closes bullish, I'm looking to take this trade where? Here. The current behavior of the market is indicating a bullish sentiment. If I identify on my intraday time frames that I get a bullish close and I want to enter the market and place my stop loss below a high low on the intraday time frames, is it wrong for me to take a buy?
No.
No.
I'm not anticipating the market's going to come up here because I'm not trading the structure of the market. I'm trading the behavior of the candle. So if I get an entry around here, and I'm fortunate enough that the market's behavior continues to continue in the direction that it's just showed evidence of, then what's wrong with me entering here, taking advantage of a 4H range candle back to the high here, taking profit, going break even, or taking partials, before then the market structure decides to continue in the direction it wants? There's absolutely nothing wrong with that, right? Does this make sense to you guys?
Yes.
Yeah.
What I'm trying to do here is just build an understanding of what I mean, what it means to trade the two candle theory. Are we focused on what the structure is doing per se? Or are we focusing on what the candle has just told us to then look for the supporting evidence to execute that trade, regardless if we take a buy in a sell bias market? Because you have to think about this. This is what's so crazy about the whole situation here, is this. You have 1 hour, 2 hours, 3 hours, 4 hours allocated, however long, I don't care, to trade in the market. This is 4 hours of your time. This is 8 hours of your time on the close. Why do all these other 20, 30, 40, 50 candles have any relevance to your life? They don't. Let me tell you something also as well in this scenario. If price pushes bullish, then eventually comes back to this key level, and then we have a bullish candle close, a strong bearish candle break below this level, how important is this level to you now?
I'm probably gonna erase it.
It's irrelevant. But if price bounces off of this level with a strong bullish close, how relevant is this level now? Very, very. Please remember that. When we come to the charts and we see what's happening here, how relevant is this level to us?
16 hours worth of information, so it's pretty relevant.
But the candle closed strong bullish. We could even say that it's closed below this level. I would hope you wouldn't do that. Only intraday traders would do this. You want to isolate your area where the wicks are forming, right? Are we looking for sells or are we looking for buys?
Buys.
As part of the two candle theory, we're in theory looking for what? Sells. But in order to look for sells, we need the market to convince us that it's going to continue bearish, right? So in a scenario like this, if we place our level here, and then we look to take a sell on the break of the low here, this is now classified as what? Our retest area. This is now classified as our breakout area, or our break and retest area. Okay? Is this candle convincing enough for us to take the sell if we get a retest?
Yeah.
Okay.
Not really.
If price pulls back to make the retest, what is our range? Yeah, I know that, but what is our range for sells?
To the first area you marked.
Correct. Back down to this low. Now, 33 pips is a lot of pips, but let me ask you something. If you're trading this on the 4 hour time frame, and you get a wick that forms like this, pushing bullish, yeah, you have a wick that forms like this, then you get down to your lower time frames and you see a bearish close. and then you place your stop loss above the wick, do you think that this is a favorable trade?
Yeah.
Yeah.
No.
Yeah.
From a
Yeah.
from a 4H perspective, is this a favorable trade?
Yes. Yes.
It's not.
Why?
Because you lose the range of the 4H candle. The only way you can execute this trade is by doing what?
Scaling down.
Scaling down. When you scale down, what you're then able to do in this scenario, let's go to the 5 minute. What you're then able to do in this scenario is you're able to decrease the range of these candles at the 50% retracement mark. So what may look like an entry on the 15 minute, let's say something like this, or the 4 hour, you can now use what we just shared a minute ago, identifying marks like this, that now increase your ranges of winning that trade. Now, I tell you why to be aware of this, because what we have here is a scenario where we do believe the next candle will be bearish based on the information. And this isn't just based on the fact that the candle closed bearish, we have to make sure we're gathering our evidence. But based on this scenario, we're also seeing that price is not breaking the low either in this sequence. Does this make sense?
Yes.
Okay. If we had a scenario where the price has broken this structural low, and no, let me find a better one. This scenario, and I'm going to go over some really good examples in a minute, right? But let's say in this scenario, we have an area where price has broken this level. If price retraces back, do we need to be concerned about this structural low? Do we need to be concerned about this structural low?
Not really.
No, because this is the area in the market where price failed. We have the evidence of price breaking, and now we can just anticipate a very simple, easy continuation trade. The reason why I'm highlighting this, guys, is because a lot of you just think that if there's a setup, I can take it because it looks good. What I want you to start doing is identifying high probability trading setups based on how the market is forming, in terms of the scenario that we have here when we have the break, not concerned about the structural lows, versus an area here in the market which may not look significant to you, but at the time, you can clearly see that the market is doing what? Doing not much. And when I woke up this morning, I decided not to trade because in the back of my mind, I could just see that the market's not doing too much. What I am convinced about is if this does decide to continue bearish, then I don't need to worry about jumping into this trade now. What I can do, let's give it to you in the opposite direction. I don't know if it's going bullish, but I do know that if it doesn't continue bearish and it starts going bullish, what I can then do is start using scaling down techniques to identify the area where price is failing to break, identify the structure of the market that potentially resembles the same behavior. And I mean, this is not a great example, but then take advantage of breakout trades that look something like this. The reason why this becomes a higher probability trading setup is because now the behavior has spoken to me first, and then I can see the evidence. I can see the evidence, and then the behavior has spoken to me, illustrating that that red candle, that 4H red candle didn't break. The behavior is now shifting. The current 4H is bullish, and now if we start breaking the highs, there's a very high chance we do what? Make a new higher high in the sequence. Does this make sense?
Yeah.
I hope so. So what this will help you to do, right, or I'm hoping it will, is it will help you to determine one important thing. The most important thing in a sequence like this is this. If you have areas of traffic or support or resistance where you see the market is not breaking, what trade idea is best in this sequence? What trade is best in this sequence?
Wait till the breakout.
Very good. It makes sense in this sequence to look for a breakout because you had added confluence. If the market is speaking to you, you don't have anything for price to resist, then you can look for what? The retest. Please tell me you guys are not getting confused. Aaron, yeah, fire away.
Hey mate, sorry, so if I can just draw this on here mate, just to clarify some of it, it's going to select me, I do apologise, I've never used this before in my life, but this area here, if we was to consider this a break above a major key area in the market where price failed to break above, it did some moves and now we broke above it, would we be wrong to look at essentially a 50% retracement as well as the two candle theory for it's come down past that red level in the market and then continues to the upside?
100%.
Right, just to clear that up, thank you very
Let me
much.
explain something. What is a better entry? Here or here?
Further below.
Alright, if you miss the best move, what you're supposed to do? Stay out.
Second bet. Oh, right, fair enough.
Yeah. Stay out.
No worries, thank you.
If I took this sell based on the two candle theory concept, or based on what I just told you, a candle was to close bearish, I can only take this trade in theory back to this level here before I have to think about management. Simply because it's around the 50% retracement of the previous candle. Okay? If price goes back to this level, then I have to question whether I'm going to be looking for the 50% retracement of this previous candle, anticipating this one to go bullish, because of, firstly, the status of the 4H candle, which is strongly bearish, and the fact that this is a very strong move to the upside that can be corrected based on news. The reason why trading strategies cannot be made rule-based is because of the variations. Okay? I think we're going to go too difficult here. But what we have to be considering at the time is what evidence makes sense in this instance. If the range of this 4H candle had pushed, let's say, to a decent range, then it would make sense that there's a higher chance this can continue bullish. Let me just tell you why. Every candle has a range, right? If this candle has pushed bullish, and we're looking for that 50% retracement, and we can identify that the range of this Audi candle has met the range of the previous candles, what is the chances that this candle will continue to push bullish? It's very slim. Also, if this candle we can see has pushed strong bullish and now creates a top wick, we don't need the daily to identify that because we can identify it from this range of this candle here. It's huge in comparison to the rest. What is the chance of this continuing higher? Very low. Look here, we have a candle that pushed really strong bearish, and then look, we had an immediate correction. You guys need to understand, you guys should know this or be aware of this through your own experience in the markets. So if the candle pushes a decent range and gives us a half decent candle size, as opposed to a really strong, overextended, flipping, humongous candle here, then the best thing for us to do is just to say, what? Maybe I missed the best move, which was the breakout of this area here to take advantage of this range. And now instead of FOMOing and thinking price is going to continue up, I either look for the sells because I expect the 50% retracement, or I just stare at the market and wait till tomorrow. Does this make sense?
Yeah, it is.
Okay.
No,
Go on.
no, yeah, it makes sense.
The candle sizes make a huge difference, but there is no right or wrong answer to any candle size. It is specific to the times that you're trading, the pairs trading, the correlations that you're finding, and the center of the market at the time. Like, I personally know from experience, I would never enter a buy after this. Ever, 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 ever take a buy after this candle close. Ever. What I'm looking for is for the accumulation phase over here, for the market to start showing signs that it's failing to continue to push higher, and then I'm taking advantage of this. That is 100% fact. I'm taking advantage of this move here, or this move here. I just explained it here, because now what I'm saying to the daily candle, or whatever candle that I need to highlight on the daily, I'm saying to the daily candle, okay, you've pushed really strong bullish already for the day. Now I want to enter buys, just continue pushing bullish for me. I know that the best entries on the daily are going to be down here. So if I'm taking a trade, I want to be hitting my trades around here, right? Around this area here. I'm not saying that it's the best area, but okay, let's just do this, right? I want to enter it around here. Let's say this is what I'm looking for. Is this the area? Yeah, whatever, don't care. I'm just trying to highlight a point. I know this is the best area to enter. If I miss this move, that means I've missed an opportunity to gain what, 150? Well, I don't know how many pips this is. It looks like 150, but missed this whole move. Versus now saying, oh, it's push bullish. I've now identified it's push bullish because it's push bullish, and let's enter the trade. That is not something you want to be doing. Okay? So I just explained, if you enter a trade, you want to be hitting it where? When the price pulls back to the 50% for a decent enough range candle, or when price takes the breakout, again, if the market has got enough room to move to the upside during a high volume period. Yeah, ask the question.
Hey Ross, so quick question. All of these patterns, double tops, double bottoms, break and retest, 50% retracements. All of these patterns are based off of the two candle theory. So no matter what trade you're taking, you're looking at that previous 4H candle and making your decision based on that.
Right.
Every trade you take, everything you do.
Correct.
Okay.
All the way down to the 1 minute.
Right. Okay.
No, but if I'm trading 15 minute, I'll use 4 hour. If I'm trading 1 minute, I'll just use 15 minute.
I see. Okay. Thank you.
Okay. So let's just take does everybody understand this? Yeah, put it in the chat for me so I know that you understand this, please. Okay, cool. You're gonna get some examples.
What?
Hi.
Can we buy 16% retracement after?
Can you buy a 50% retracement after what?
After the reset?
Definitely. That's where you want to get in. We just spoke about that. So if you're buying, the color of the retracement will be red, and if you're selling, the color of the retracement will be green. But you're anticipating the wick to form first.
Alright, thank you.
Okay. So remember, traders, I said to you, when you're looking at the charts, you need to make sure you're zooming in. If we look at it like this, is there any trading opportunities? No, there's not. If we zoom in, now we're in business. Hey, this is a great example of what I just said here. This is a great example of what I just said here. Look at this area in the market where we can start to see multiple wick projections or whatever else. Just because this candle was closed bearish, it doesn't mean that you're going to be looking to sell it. Even let's put it here. What you want to be seeing is clear structure in the market. Okay? So look here, we have an area where price broke above. I think we spoke about this yesterday. Does this not look clearer than this information here, even though this candle was closed bearish?
Yeah, it's clear.
Okay, look here. This candle's closed bullish. Just because we follow the two candle theory, do we want to be buying?
No.
Right. Does this not look clearer?
Yep.
Okay, this is where I need to get you guys at. Let's say now we're looking at this scenario here in the markets. We can see prices just broke above this area. Is this a buying opportunity after this candle closed green?
Yeah.
Okay, but what do we have to consider?
We're not in a pullback phase.
No, forget about that. We have
Okay.
to consider this area here where the wick projections are. Okay, let's say now this candle closed green. Can we buy?
Yeah, we have a little range.
Yeah, we have a nice area back to the upside.
Yeah.
Okay, if this candle closes bearish, can we sell?
Yeah.
Absolutely, we have enough room back to the downside. Look here, price created a level. This candle closed bullish. Can we take a buy?
Yeah.
If we consider it, we probably wouldn't take a 50% retracement on this, would we? But we might take a breakout. Using 2 candle theory at the 15-minute time frame, we can look for opportunities. Does everybody see how this is? Like, we just have to use common sense here when looking at these scenarios. And I think opposed to common sense, I've been really trying to think about this, but as opposed to common sense, it is just what it is, right? Some days we're going to come to the markets and the trades are going to do what? Work out for us, and some days they're not. As long as you're following the rules that you've created based on the fundamentals that you're learning, then in theory, there's no reason why you should be a profitable trader as long as you're not doing dumb shit. So now it's just time. So now all it requires is enough time for you to identify what works for you, what doesn't, during what sessions, on what pairs, what behavioral pattern you need to abide by or display in order to get the best out of the markets, the decisions that you have to make whilst in trades, whether you're a break-even trader, hard stop loss, partials, 1 to 3, 1 to 5. This is what you guys are going to have to work on. The approach is very, very simple. If somebody took a sell because they saw that this candle closed bearish, I would be thinking in my head, you're nuts. Because this is something I know that I would never trade. I'm more happy to take a sell here because I see an overextended market and I anticipate the market to go down. But because this makes more sense in this scenario and I lose this, it's fine. But taking a sell like this or like this in this scenario, it makes no sense when the market is speaking to us. Okay? What about this current candle in GJ now as previous close bearish? So the previous candle closed bearish. So what I'm doing in this scenario is just isolate my structural low, 50%, and my structural high. I'm now anticipating pound to be weak. I need to see pound weakness, okay?
I'm looking short on that myself, if I'm being honest.
So I need to see pound weakness. Pound is not weak at the moment. Pound is not weak. So now I need to check for yen weakness. CAD needs Aussie dollar needs to go up. CAD needs to go up. New Zealand dollar needs to be going up. I see this. I see this. USD JPY. No. Yen is not weak. So that means I'm relying on pound. Yen is strong. We're looking for yen strength. Pound weakness, yen strength. Sorry, yen down. No. Yen down. No. Yen down. Euro weakness, USD down. So euro is showing signs of weakness. Yen down. Now, pound is not weak. Previous candle closed bullish. Previous candle closed bearish. So there's no confluence. Secondly, I'm relying on JPY strength. Yen is definitely not strong. Looking at the market structure. So that means that this trade is literally, well, I don't know any smart sayings, but this trade is just a death wish, a death trap. But if you are trading this, what you're looking for is for price to come back. Nah, don't even trade it, man. It's up to you, whatever. But you're looking for price to trade around the 50% region, or you're looking for price to create a strong bearish candle close or multiple wick rejections to isolate then a structural low that you anticipate price to break, and then you're looking to take the trade once given that evidence. There is no evidence here whatsoever to take this trade. And I think with the market analysis, the way we've just gone over it, there is absolutely no evidence that you should be relying on yen strength or pound weakness. Does this make sense, guys?
Hey, Rox, is that how you identify currency strengths in the morning? You just tell yourself JPY up, JPY up, JPY up.
Correct.
That's what you do?
Correct.
Gotcha.
Now, you guys might be saying, well, is that enough? Well, go to the days where the markets have moved really strong, right? Let's go to the days where the markets have moved really strong. Let's start from here. This is 8th of April, 6 and 10, right? On pound USD. 8th of April, right? Here. So if we see that the market conditions on the 8th of April have been moving strong to the downside over here. And we can see that here, it hasn't followed the same. What could that suggest to us?
That's not as strong as we think it is.
Correct. And I beg you guys really trust me when I tell you this. It's probably best to stay out of the markets because there's probably a lack in volume. Okay? Or there is not enough correlation that lines up to push the market in the direction we want it to go. I'm trying to find something that does correlate. Let's take a look at this. This is on the 11th of April at 2 o'clock in the morning, 2, 6, and 10. 11th of April. No. Again, we don't have a correlation there because we have a discrepancy with yen and pound. Let's try and find, I just want to show something to you guys. Where we have strong market conditions. Oh, this might help. Please, God. Yes. Look here. Okay. Strong bullish, strong bullish, strong bullish, strong bullish, indicating what? Potentially Aussie dollar strength. Now look here. We have it lining up. Strong bullish, strong bullish, strong bullish, strong bullish. Please be up. Yes. Strong bullish, strong bullish, strong bullish. If you start to see this behavior, let's say at 2 o'clock, and you start to see this behavior at 2 o'clock, and then you want to trade Aussie dollar JPY, and you see this behavior at 2 o'clock, guess what that gives you? Immense amount of confidence to say, hold on, Aussie dollar is strong. It lines up across the market. I can't see anything going on with pound or USD, but I can see Aussie dollar strength. Here's confirmation that I'm on the right side of the market today. So when you do scale down, you can then do what? Look for potential trading opportunities. And I'm telling you, guys, I'm telling you, at one point or another in the day, you will find that if the currency that you're trading is strong, the market conditions will line up. And that is what you call a high probability trading setup. What date is this? The 10th? No, it wasn't the 10th. 6 at 10. 6 at 10. 6 at 10. Money, money, money. You know, money, money. Like today, the reason I didn't trade is because of the market conditions. I just couldn't understand. On pound, one was going bullish, one was going bearish, and then in gold, it was, what was gold doing again at the time I was at the charts? Oh, I don't remember, but it wasn't doing anything special, okay? And that is it. I'm staying out of the markets. I'm not then saying to myself, oh, look, this candle's closed bullish, this candle's closed bearish. Oh, hold on, this candle's closed bearish, time to look for sells. Because if this candle closes bearish, what time is this? 12 at 6. 12 at 6. 12. Yeah, that candle closes bullish, bearish. Now you're saying, oh, I'm looking for sells. Then you go over to pound, and then it's done this. It doesn't make sense. Do you understand? To look for a continuation of that. What you will find, guys, is one pair will lead, the rest will follow. I hope I've driven home this point. And this is what keeps me out of the markets, guys. This is what keeps me out of the markets. When I can't make sense of why pound is supposed to be strong on pound JPY, but it's weak on pound USD, I want to trade the days when I can see Aussie dollar is going ham. Boom, boom, boom. Then I'm confidently going to take trades all day long. If I don't see it, then you have to stay out. If the market conditions and
battery is low, please recharge in time.
Posted when you wake up. If there's one trade or one trade at the posted trade, and that's all you see in the morning, that's probably enough evidence for you to say, you know what, time to hit the gym and then come back later. Okay, do we have any questions on this?
This is being recorded.
Yeah, it's being recorded. What's the question?
If I'm trading GJ, if GJ is the pair that I'm trading, would GU and UJ good enough to look at versus strength?
Yes.
Okay, thank you.
Okay. Let me ask you guys a question. At this pre-London, right, on the 6 o'clock close, can you all identify Aussie dollar strength?
Yeah.
Pre-London, on the 2 o'clock close, can you confirm that Aussie dollar strength?
Yeah.
Pre-London, on the 6 o'clock close, can you continue to confirm that Aussie dollar strength?
No.
Yeah.
Okay. If the markets line up, there's a very high chance you're on the right side of the market today. If you have to struggle to figure it out and you keep going backwards and forwards trying to figure it out, there's a problem. That is your sign to stay out of the markets. You will make a lot of money when you know when to walk away and not trade. And you'll find a lot more peace as a trader because you won't feel like you're forcing the process. Like, you see this shit right here? This is something I would never trade. Makes no sense. This goes bullish.